Hello, everybody. I'm Natalie Brunell. Thank you so much for checking out my show, where I get to hear from the leading voices in Bitcoin, financial markets, political structures, philosophy, and more. Please make sure you're subscribed to the show. And if you're watching this on YouTube, like this video so more people see it and hit that notifications button so you don't miss out on any new content. This podcast does not provide financial advice. It is for educational and entertainment purposes only. So make sure you always do your own research before making any financial decisions and be aware of your risk tolerance. I'm able to produce this show thanks to my sponsors, and I'm very picky about who I choose to partner with. So I hope you'll take the time to listen to the ad reads throughout the show. All right, now to my main partner, Swan Bitcoin. I'm proud to partner with Swan because it is a Bitcoin-only company focused on helping people save for their future and self-custody their Bitcoin, not trade it. Swan offers a private client service, retirement planning, tax loss harvesting, and even home equity conversion. Swan is also committed to educating millions of future Bitcoiners through free educational resources and media projects. I actually use Swan to dollar cost average every day. I deposit a little bit every day that's equivalent to what I might spend on a meal, because I actually read that dollar cost averaging daily ends up with a lower cost basis than weekly or bi-monthly at the end of a given year. Swan also produces my show, Hard Money, which reports on Bitcoin adoption and macro trends around the world. So make sure to subscribe to that as well. And to learn more and get $10 in free Bitcoin when you sign up, head to swanbitcoin.com/Natalie Brunell. All right, it's time for the show. Welcome back to another episode of Coin Stories. I am joined today by someone that you might know on Twitter as Croesus BTC, but his real name is Jesse Myers. And Jesse, I'm so excited to have you on the show because I've been a follower of your writing. So thanks for coming on.
Thanks, Natalie. I've been excited to talk to you and come on your show.
All right, so I want to hear a little of your backstory because I just learned that you are a SoCal native. I just left SoCal. I left the beautiful sunny weather for the Midwest. But tell me a little bit about your upbringing, because if you're from the Pasadena area, I envision that you grew up the lifestyle that I saw in Father of the Bride, which was one of my favorite movies growing up.
Yeah, that it was actually filmed in Pasadena.
Yeah.
It was that was part of the world I grew up in. Great weather and great people. We have a saying out here that everybody's Pasadena nice. Pasadena people are historically come from the Midwest. So
Really?
they're transplants from like Illinois and Ohio. And if you're familiar with the Rose Parade and the Rose Bowl on New Year's Day, that's kind of our big
Yeah.
thing. And that started actually because there's a country club here. And at the turn of the century, they wanted to brag to their friends back east in the middle of winter. And so the idea was, in New York, our friends are up to their knees in snow. So while here our orange blossoms are about to bear, so let's show the world our paradise. And so
Wow.
that's how the Rose Parade and the Rose Bowl got started. Just a celebration of winter in Pasadena. So a great place to grow up. It has completely spoiled me for living in colder places, which
Yeah.
is an ongoing struggle because I don't know how long. I don't know if we'll be in Pasadena long term, in California long term. We might want to go to a different state. We'll see. But it makes it hard because they have to be in the Sun Belt.
Yeah, it's a beautiful place. I actually covered the Rose Bowl and activities surrounding it for my old career as a journalist. So I've been out to Pasadena many times, but I'm kind of curious, was there anything about your upbringing that maybe planted the seed where you would be curious about Bitcoin down the road? What did you want to be when you grew up, and what did you pursue in college?
Yeah. So my dad works with data. He is a professional storyteller with data, particularly census data. He's a research professor, and so data trends and telling stories with those were always a part of my world.
Hmm.
And I didn't realize how unusual that was, I guess, and I didn't realize how relevant that would become to trying to understand Bitcoin, in terms of seeing this history of 14 years of data and trying to understand what's driving this pattern, and will those drivers continue into the future, and what does that mean going forward? So extrapolating what data we have to try to understand what's happening with Bitcoin. When I was growing up, I was most interested in biology and science, so I studied neuroscience in undergrad, just because it was interesting.
Neuroscience? Oh, wow.
Yeah, I studied neuroscience,
Cool.
mostly just because it was interesting. Those were the most interesting classes to me. So, but I realized that what moves the needle in the world is business. So I got a
Mm.
business minor. Couldn't get a job with a business minor in a good starting role in the business world. So went and got a master's of accounting, 1 year degree, which gave me a great foundation in the language of business, really trying to understand your statement of cash flows, your balance sheet, the financial statements that really underpin everything. And that got me into management consulting at Bain and Company for my 20s, which led to me going to Stanford. And that's where I first encountered cryptocurrency and took interest.
Ooh, okay. I want to know the story, but first, just because I'm very curious and fascinated by neuroscience as well, what can you tell us that you've learned about the brain that maybe would surprise people or that most people don't know?
That's interesting. Wow. So much about the brain is unknown still. Like, and it's fascinating that how you learn about the brain is really through individual cases where something has gone wrong. So everything that we really know about the brain is because somebody has brain damage in a very particular spot and is missing certain functions.
Wow.
For instance, there's two areas on the side of your left hemisphere, Wernicke's area and Broca's area, which control all cognition of language and creation of language.
Mm.
So there are some people who have one of them that's damaged and they can understand everything, but they can't communicate.
Wow.
And then the flip would be somebody who can communicate their thoughts but cannot understand anything that is said to them or written to them or anything like that, because that area that controls that is damaged. So it's a fascinating field of learning about how your brain works through these examples of when it goes wrong and why and where.
I find the subject to be so fascinating. And after this call or maybe another time, you could tell me some of your favorite books, because not to go on too much of a tangent, but I'm fascinated by the memory. We take it for granted, right? And all I think about lately, especially with Bitcoin, is how can I get my brain to just remember everything that I'm learning about this beautiful subject in these amazing books. I wish I could. I don't know if you've seen that meme online where there's a little boy and he has a book open, and I don't know where in the world he is, but he's turning the pages and he's like flooding his mind with the energy of the knowledge with his hands. He's making like a gesture that he's pouring the knowledge and memory of the book into his brain. And I'm like, I wish I could do that, because the older you get, and I have to practice, for me, it's a lot of memory recall for what I do. And it's like, how do you train your brain to be really, really good at recalling everything that you've learned? And that's one thing I'm fascinated about. Sorry for the tangent, but
no, love it. And in terms of books, I think the best neuroscience book, the most readable, interesting, engaging one is from Oliver Sacks, the legend, the man who mistook his wife for a hat. And
okay.
That is one of the case studies in it. He writes beautifully about his patients.
Wow.
And that is a literal problem that one person with certain brain damage faces.
Wow. Our brains are amazing. Okay, I wrote that down. Okay, back to your journey. You were at Stanford. How
Yeah.
did you discover Bitcoin?
Yeah, so I discovered Ethereum, and of course, then that set me on a journey that eventually led me to Bitcoin. But I I had the experience, I think a lot of people did too, of like in 2013 being aware of Bitcoin having some big surge and being like, wow, people are crazy. Like, I don't know why Bitcoin has done so well, but I kind of regret not being in it.
Mm-hmm.
Like that was the extent of my understanding or awareness of Bitcoin then. That was 2013.
Wow.
And then the next year I was at Stanford and people started talking about this new thing, Ethereum, which was
Mm.
gonna be, gonna chip away at the incumbent position of Bitcoin. It was so much better than Bitcoin. It did all these things, and what really made me take interest in it was that several different friend groups, there was somebody talking about it.
Mm.
And so the third time I heard about it from people who weren't really friends, I was like, okay, I have to pay attention to this. And I, bought a little bit and watched it go down 50% and stay there. So I bought the local peak in 2016
We've all done
and
it.
yeah, and then watched it go down 50% and stay there for 9 months. And then of course it started to take off in early 2017. And that led me to, being interested in Ethereum and that whole ecosystem beyond Ethereum of like what's next. That the whole idea. I was at Stanford, and so this Silicon Valley ethos of invest in innovation, right? Bet on innovation, and the story of success in investing in the internet was to bet on the up and coming, promising, technology driven projects, right? Like whether that was Google or whatever. Um, and so everyone brings that to crypto. We all do that. I think it's because it has become embedded wisdom in our culture. Like this is how you should invest in technology. Have a diversified portfolio of promising upstarts. Um, and that's what I did for that era. And then I got crushed in 2018 because the bear market was very unkind to altcoins, and that forced me to. But that went against my thesis. My thesis was that Bitcoin was the first and would lose position, would lose relative standing to these innovative upstarts over time. But here in 2018, suddenly Bitcoin is shoring up its position, um, you know, and not suffering as much as everything that I had invested in. Uh, and that forced me to try to dig into why. Like, what was I missing? What was it about Bitcoin that was driving this? And I happened to read the bullish case for Bitcoin and the price of tomorrow and Ray Dalio's The Changing World Order,
Mhm.
um, all in the space of about a month. And then that led me to reading the Bitcoin Standard, and the rest was history.
Oh,
So
wow.
that sequence really kind of nailed it for me of, oh, I was thinking about this the wrong way the whole time here. This is not about technology. This is about money. And the properties of money that I have been taught at Stanford, at Bain, throughout my whole education are wrong. What I thought I knew about money was wrong. It was an incomplete view of it, really a Keynesian view of it. And when you really kick the tires on that, it doesn't hold up. And history in particular is full of examples that teach us um, the true nature of money and what really happens when hard money comes up against less hard money, and hard money always wins. And here comes Bitcoin, the digital perfection of everything that was good about gold in terms of being hard money, and removes the Achilles heel of gold, which is its physicality, its materiality it causes two problems. It causes it to centralize in vaults, and then that leads to the issuance of promissory notes, which turns into fiat money.
Mhm.
Um, but it also causes this other problem of there's an infinite amount of gold in the universe, and because it's physical, it's all you have to do is create these atoms and stars blowing up do that. So, all it takes is there's $12 trillion of gold above ground, like in vaults in the world. And there's $800 trillion of gold dissolved in seawater today in the oceans.
Wow.
So all it would take is for somebody to bioengineer a mollusk to pull gold out of solution to build its shell. And suddenly you've broken the supply, dynamics of gold, and you could flood the market with gold. And that's not even talking about typical below ground deposits that you would find with traditional mining, or asteroids, which are full of gold because of how they're created, and the potential to do asteroid mining into the future. So gold has these weaknesses because of its physicality, and Bitcoin is this perfection of the strengths of gold in digital form, this singular instantiation of absolute scarcity, which has never been possible in the physical realm and is possible in the digital realm. And Satoshi somehow, through some unbelievable series of luck and brilliance, absolutely nailed it in his first try.
I love the way you articulate things. And I want to come back to some of the points that you just made, especially with how gold or Bitcoin will eat into asset classes like gold. But going back to that journey that you took, that so many of us have been on, where you went from crypto to Bitcoin and recognizing the difference in the monetary properties that make Bitcoin so unique and that make crypto tokens also different. And I love Lynn Alden because she introduces a very thoughtful perspective on how to look at the difference with regards to when you sacrifice some of the decentralization or you try to improve on some of the qualities of Bitcoin, you ultimately have to introduce governance, and you either sacrifice the scarcity, you sacrifice the decentralization, and it's essentially a form of equity. It's like a digital equities. But how do you describe the difference when people ask you, what's the difference between Bitcoin or crypto? Why did you decide to go from the altcoins in terms of investing to just seeing Bitcoin as so important that you would focus your energy on that? What do you say?
Yeah, it's such a hard question because there's so many things you want to say at the same time, and it's hard to really structure it and order it. I guess I end up talking about two pathways here. There's and thankfully the SEC is starting to make it clearer on this first one of Bitcoin is a commodity because of how it was designed, and everything else out there, 99.9% of altcoins are designed in a way that makes them securities, makes them unlicensed securities in particular. And that's because of the Howey test of, they have a leadership team that is retaining some portion of the supply in order to fund this project, and people are buying these tokens with expectation that this team will put in work to deliver them profits. That's a security. That's the Howey test in action. So there's that whole problem of they kind of disqualify themselves at the outset because they are securities. So do you really want to be holding something that the SEC is going to crack down on because it flies against securities law? I don't want to do that. You can make the argument of the Howey test should be updated for whatever reason, but currently it's against securities law. So there's that whole realm of thought. But I like to keep it a little simpler and just talk about how digital scarcity is a one-time phenomenon. I think when you focus on that, it just brushes away all the other arguments, because what Bitcoin created, what Satoshi created with Bitcoin was, and the true breakthrough of Bitcoin was the invention of digital scarcity. So before then, it had never been possible to have a digital system where it was impossible to copy and paste something. It was impossible to create more of something. And Bitcoin is that breakthrough. It is the creation of digital scarcity. Now, here's where the problem comes in, because anybody can copy that system. So you can take this great little pie and you can create copies of it. You can create a whole bunch of copies of it. When I first started, thinking about it in these terms, there were 7,000 altcoins. A year ago, there were 21,000 altcoins. There's probably 30,000 now. You can always create more copies of a system of digital scarcity. So then it's a little bit of a philosophical leap of, well, those copies are inherently not scarce because the marginal cost of creating an additional altcoin is nothing. You can always spin up a new copy of that, a new system. And because of that, it means that the original instance of digital scarcity is the only one that is actually unique. It's actually scarce. It's actually finite. So there's two categories. There's Bitcoin, digital scarcity, and then there's copies of digital scarcity which are not scarce. So, if you just think about it in those simple terms, everything else melts away. Bitcoin's the only one that has actual scarcity, because you could buy a bunch of Solana and think that you have a portion of the supply of that thing, but Solana 2.0 is coming around the corner, and there's going to be 10 copycats of that. So they have their own supply, and therefore, and that adds to this market. It dilutes what you believe you have as a finite portion of the Solana market. But the copycats are coming along and totally upend that thesis. So the only thing you can rely on to be scarce is the original and only instance of digital scarcity, and that's Bitcoin.
It's time for a quick break to hear these messages from my partners. First up, Bitcoin Conference 2023. This is the ultimate Bitcoin event every year, and it's going to be held once again in Miami Beach, May 18th through the 20th. Last year, there were about 30,000 attendees, and it's hard to believe the scale until you see it in person. There are incredible speaking sessions featuring the world's biggest Bitcoin voices, networking events, games, parties, and of course, Soundfest. I actually credit my career transition to the Bitcoin conference because I went for the first time in 2021, and that's where I dropped my first episodes of CoinStories, not expecting this to become my full-time job at all, but just hoping to meet Bitcoiners and find more guests for the show. I actually went up to people like Michael Saylor backstage with a business card, and that's how I got him to come on the show. So anything can happen there, especially if you dream of working in the industry. Ticket prices go up every month until May, so don't miss out. And for 10% off, use the code HODL at b.tc/conference. I'll see you there. All right, next up, Fold. Fold is the best Bitcoin rewards debit card and shopping app in the world. You can earn Bitcoin on everything you purchase, from Amazon to groceries to sprucing up your wardrobe with Fold's Bitcoin cashback debit card. And you can win free Satoshis every day, or even play for the chance to win a whole Bitcoin by spinning the daily wheel and the purchase rewards wheel. I have an alarm set every day so I don't miss out on spinning the wheel and earning free sats. And it's also a great app to get someone that is totally new to Bitcoin. So if you want to join the fun, head to foldapp.com/Natalie and get 10,000 in free sats when you sign up.
The original and only instance of digital scarcity, and that's Bitcoin.
I think these topics are so interesting because they really dig into the first principles, but for some people, it really is hard to grasp that idea of the power of a network effect, right? I mean, I think Preston had a really interesting tweet the other day when someone was asking, well, why can't you just copy and create a new Bitcoin, right? Technically you can, but I think he described it as, you could fork the English language, but how do you make everyone speak your version of it? Or, you could copy Wikipedia, but you wouldn't have all of the source links pointing to all of the articles. So tell everyone to use your version of Wikipedia, create the next Google, create the next whatever it may be, change the protocol that, computers use to speak to each other. It's not that easy once network effect, takes off. And I also think it's interesting how, today we conflate everything, including altcoins, with this idea of currency. And one of your recent articles touched on the idea of whether we should even look at Bitcoin as currency. But it does make you think of that bigger picture of everyone's trying to keep the value of their money, right? They stick it into a house because our houses are now stores of value. They stick it in a stock portfolio. They're trying to do whatever they can so that their money isn't the melting ice cube that it is due to inflation. So let's touch a little bit on that idea of the value proposition of Bitcoin, how to actually value it, because you brought up some really interesting points, and I'll show some of the charts, especially if we discuss them. But you show these charts of all these different asset classes, and if Bitcoin starts to eat away at them, one of the things you presented was a potential $200 trillion market cap, which I think would make Bitcoin $10 million of Bitcoin, which might be, might sound the alarms for some people saying, what did he say? $10 million of Bitcoin? How did you get there?
Yeah, it sounds crazy. It's almost embarrassing to show your work and come up with a number that big, but that's been the process of the last few years of thinking for me and kicking the tires on this thing. So, because of my time in management consulting, one of the things you learn is how to do market sizing. It's all about how do you come into a question that's unanswerable and come up with a good process to get a decent estimate, right? And so typically that's about like, how much money could this company make if we start competing in this other market, and you have to come up with an answer, and it's a kind of an impossible question, but you triangulate and you estimate and you come up with something decent.
And you have cash flows and all of that you have to consider in the traditional space.
Yeah. And so the steps there are typically you want to take a look at the market you're thinking about entering and say, okay, how big is this market? Who are the players in it? How big are they currently? And then based on what we know about our strengths, how much could we win? How much of that market could we take? Right. So that's like kind of your typical lens that you're analyzing a company's potential with. But that applies to Bitcoin too. And I think we always get so caught up in the details, and we want to, find out if there's a Bitcoin killer, that we forget to like take stock of what Bitcoin is actually doing and zoom out enough to ask these simple questions of what market is Bitcoin competing in, what's its actual value proposition, how big is that market, how much of that market could Bitcoin win, and what does that mean? And we think that Bitcoin is a currency because it is, but it's actually much more than that, because the real value proposition of Bitcoin is to be a store of value, to be a store of value asset. And what that really is focused on is, everyone has their portfolios. And that means in your portfolio, you have placed value in different assets. And that's because you think that those assets will propagate your value through time for you to use in the future. And you're hoping that value is propagated without losing value along the way. And hopefully you're going to appreciate, your value is going to grow over time. And that's why you have it in stocks or real estate. So those are store value assets. That means anything that has value is a store of value asset, because people have placed value there and are using that as a vehicle to transmit their value through time. So that means real estate, stocks, bonds, gold, art, and collectibles. And all of those together add up to $900 trillion. So that's the world of value today. The global asset landscape is $900 trillion of value parked in different assets.
And just to add a note, I mean, part of that, a huge chunk of it, which is bonds, is debt.
Yes.
It's debt.
It is. That's right. It's the classic example would be like the U.S. Issuing debt, which means it's effectively creating money out of thin air and promising to pay a return to whoever buys that bond. So part of that problem here is that we have now entered an era where the value proposition of holding bonds or holding fiat money, which is another category there that I didn't mention, is bad, is very bad, because the national debt and the unfunded liabilities going forward are going to necessitate a level of printing that will outpace the nominal yield on holding bonds. Mm-hmm. That's the only way out. We now have $31 trillion of national debt, 170 trillion of unfunded liabilities in the U.S. alone. That means Social Security and the like that that will have to be paid. And coming from where we're already running budget deficits of $1 million, and now and we've grew the national debt on in an environment where we had declining interest rates, and then 10 years of zero interest rates. And that meant that it was possible to service a huge debt burden. But now interest rates have had to go up. If we were to jump to a 10% interest rate, which would be above the inflation rate and the conventional wisdom on how you break the back of inflation, then you're talking about $3 trillion a year in interest expense when we're already running a multi-trillion-dollar deficit in our budget. So you're talking about something like $4 trillion of deficit going forward. You have to print in order to make that up. So anyway, there's going to be a lot more printing, and bonds are not going to, the nominal yield on bonds is not going to beat the true inflation that we're going to see over the coming decades. So that's what Bitcoin is competing with as the lowest hanging fruit, I think, in terms of where people have their value parked. So we have our $900 trillion market size. And then it's a question of how much can Bitcoin win? Like how much value can Bitcoin actually take here? And it is currently a $400 billion asset in a $900 trillion ocean. That means it's 1/2000th of the world's value is Bitcoin. That means that collectively the world has a 0.05% allocation to Bitcoin. And now we can look at like what is Bitcoin's real value proposition here. So we've talked about digital scarcity, the fact that there's only 21 million Bitcoin ever, and we're asymptotically approaching that supply cap. And that is what the halvings do. So every 4 years, there's a supply shock, a quadrennial supply shock that sets in motion price discovery, because when you cut supply in half, but you keep demand the same, the price has to reestablish equilibrium. And the only way for it to do that is by drifting upwards. So that's what we've seen after every single halving. In 2020, 2012, we had a halving, 2016, 2020, and in the 12 months following, there's been the price bubbles upwards. And of course, that turns into a bubble as people get too excited and pile in and take on leverage, and it goes too high and then it crashes. And we have this series of higher highs and higher lows with successive bubbles along the way. Like that's how Bitcoin has performed. And the halvings continue into the future. So these mechanics of a supply shock causing the price to drift upwards because there's not as much supply being created that the market has to absorb. And as a result of that, demand has to bid up the price in order to find more supply that's willing to sell. Those mechanics are written into stone with Bitcoin. They will continue into the future. And so then you're looking at an asset that is unlike any other asset out there, where it has this unthinkable property of it gets more valuable over time because of its endogenous properties of increasing scarcity. And nothing in the physical world can do that, because nothing in the physical world can have a supply schedule, because that's not how the physical world works. So how much value in the world would be interested in being in an asset that reliably appreciates in value over time? Is it just 0.05% of the world's value, or is it probably more than that? I think the only logical conclusion is that it's more than that. And that comes back to how many people in the world have really done their homework on Bitcoin in order to understand its properties. And what's the current state of adoption with Bitcoin really? There's 4 million Bitcoin addresses that have 0.1 Bitcoin or more in them. So that means there's 4 million people at most who have secured their own Bitcoin savings, a material amount of Bitcoin savings, $2,000 or more of Bitcoin savings, in an address they control. So if you account for people who are storing it on exchange, rounded up to 10 million adopters so far that have a material amount of their savings in Bitcoin. There's 2.2 billion people in the world with $10,000 or more of net worth. That's really your target market. So 10 million out of 2 billion is 0.5% of adoption. So that number checks out too. And starts to paint this picture of it's very early in terms of Bitcoin adoption. And that's why the market, the total value of Bitcoin is still so low. And then it becomes only a matter of time before people learn enough or enough cycles play out for people to get the picture that this thing goes up in value every 4 years because of the halvings. And then it's a question of how much will the world want to store their value in this asset that has superior store of value properties compared to anything else in the physical world. So the conclusion of that analysis there is I put together a table showing here's where all the value sits, and here's how much I think Bitcoin could capture from each of these buckets, from bonds, from real estate, from stocks.
Yeah, I'm going to put that chart up for those of you watching this on video. So how did you come to these conclusions of gold 50% Bitcoin capture, collectibles 5%, stock market 15, real estate 15, bonds 30? How did you come up with that?
Yeah, so to be fair, that's just my kind of estimates of what feels right. And anybody can run their own numbers. I encourage everyone to take this table and come up with your own estimates about what feels right in terms of what portion of the value sitting in bonds do you think might prefer to be sitting in Bitcoin over the coming decades instead, and so on. And I tried to be conservative with what my estimates were here. So, I think that bonds are the real melting ice cube over the coming years because of the money printing that will be necessary when we have a debt to GDP of 130% and amount of unfunded liabilities coming due. They're going to print an astronomical amount, and the nominal yield on bonds cannot keep up with that. So you're going to be, in real terms, losing money every year you hold bonds. That's my rough estimate. By contrast, I think that Bitcoin's inherent properties make it such that if you hold for 4 years or more, you're going to grow your value. So that's the choice that everybody holding bonds is facing. And they're currently making that choice every single day, whether or not they know it. They are holding their value in bonds rather than in Bitcoin because they don't understand Bitcoin yet.
Yeah.
And so as more time plays out, as more people catch on, I think a large portion of the bond market will realize that it's lower risk, and actually it's lower risk and better return to have the portion of their portfolio allocated to bonds allocated at least in part to Bitcoin. And so I think 30% of that market shifting over the next several decades to Bitcoin feels reasonable, if not low. I think you could make a case for it being more like 90%, but I don't want to sound delusional. So let's start with 30% and see where that takes us. And so it was kind of just a process like that with each of those categories. I think that people are less likely to sell their art. If you hold a Rembrandt, that's your trophy. You're probably not going to reallocate some of your portfolio from that Rembrandt to Bitcoin. You're probably going to sell some of your bond portfolio, or maybe trim some of your stock portfolio, or even get rid of that extra rental property that you have that is a headache because you have all the problems of being a landlord and all the overhead and friction of holding real estate. And you could instead hold this asset that has no friction, no overhead, no hassle, and still delivers a reliable return when you can tolerate the brutal volatility that happens intra 4-year period.
For sure. And I'm going to hold on to, this is my art from Brecky, my colleague. So I do value scarce, especially Bitcoin art. One thing I found interesting about your chart is you obviously don't really mention the time that it might take in order to reach this type of market cap. And I think it's important to remember something that Ross Stevens actually pointed out in a recent interview. I don't know if you saw it, but this idea that right now, if you're a Bitcoiner, you're working actively on building the world that you want to see. And you might not live in that world of the Bitcoin standard, right? It might happen after us, but that's okay. And the people Ross mentioned, the people that were building these magnificent cathedrals that would take over a century to build, they would never see the fruits of their labor in totality. And they got up every day and worked for it anyway, because they wanted their children or their children's children to be able to enjoy it. And I love to remember that, because some of us are, price refresh happy, and we wait to see, what's it at every single day. And I was certainly like that in the bull market. Oh my gosh, it was like I would wake up in the morning and want to check the price, but this is the long game. This really is the long game, and it might take a long time to get there, and there might be some some seismic shifts in our whole monetary system that are chaotic and unpleasant. And my hope is that Bitcoin is this sort of peaceful life raft that people can opt into, but there's surely going to be opposition from the powers that be, whether they're here in the US or in other countries. And so, whatever time it takes, I think this is a world that's worth fighting for. And it sounds like you do too. All right, it's time for another short break to hear these messages from my partners. First up, CrowdHealth, a Bitcoin alternative to health insurance. Health insurance costs can be sky high today, and you essentially send money every month to a massive corporation, the health insurance black hole, as I call it. And if you don't need any healthcare, you never see that money again, right? But if you do need to go to a doctor, you end up having to pay even more out of pocket, especially if you end up as one of the 20% of claims on average that aren't covered. With CrowdHealth, you pay a small monthly fee that goes into an account that you actually accrue over time and is yours to use or keep if you ever leave. You can even save that money in Bitcoin. CrowdHealth is all about community, and the community crowdfunds everyone's healthcare. So if something does happen or you have a doctor visit, CrowdHealth will negotiate down the medical bill much lower than what insurance would be. And then the community helps you cover it. And in return, you help others cover their needs. For more information, you can head to joincrowdhealth.com/Natalie. And if you use promo code Natalie, you get 6 months for $99. All right, next up, iTrustCapital. iTrustCapital lets you invest in Bitcoin for your retirement with the tax benefits of an IRA. You can defer taxes on gains using a crypto IRA, or with a Roth IRA, you can withdraw tax-free at retirement. And here are some important things to know given the recent crypto contagion. iTrust does not lend against client assets. iTrust accounts are also FDIC insured up to $250,000, and iTrust does not hold customer assets or money. Assets are actually held between Coinbase custody and a custody platform called Fireblocks. And Fireblocks, by the way, underlies pretty much the entire industry. Their multi-party computation technology is the gold standard of custody for institutions and allows for private keys to be separated, encrypted, and shared across multiple parties in cold storage. So if you're doing retirement planning and considering adding Bitcoin to your IRA portfolio, you can sign up for an account and get a $100 bonus at itrust.capital/Natalie Brunell. I think this is a world that's worth fighting for. And it sounds like you do too.
Yeah, I absolutely agree. I'd never heard that cathedral analogy. That's perfect for what's happening with Bitcoin. I think the reality of it is we as a species, we take several generations to adopt something new, and for that matter, it takes us several generations to adapt our personal wealth mantras. I think that the climate that was set in motion since since 1981, when interest rates peaked at 15, 17%, something like that, and have been trending down ever since. That downward trend of interest rates is what really drove asset valuations, financial asset valuations going through the roof. And that means stocks and real estate. And what we've, as a culture, taken away from that is the received wisdom from the people who did well in that generation, the boomers. Mm-hmm. And what they've all told us, the people that we pay attention to from that generation, they say, get a mortgage and build your real estate equity, and plow as much as you can into your 401k. Like, those are the two pillars of personal savings that worked well for the boomers. And so we have received that wisdom culturally, socially, and that's what we still think, that's what people default to. When in reality, the conditions have changed, and what worked over the last 40 years is not going to work, can't work. The math doesn't allow it to work over the coming 40 years. So, in that same sense, I think we have begun the Bitcoin, like the era where having Bitcoin as a major, if not primary pillar of your personal savings strategy is the winning formula. And it will take a generation for people to really get the picture. So, when I talk about Bitcoin has I think a conservative even chance of becoming a $10 million a coin asset in today's dollars, mm-hmm. that means going from 0.05% of the world's value to 25% of the world's value. So eating a quarter of the world's value, Bitcoin is just going to suck it in, ingest it like a black hole. That's what I think we've embarked on mm-hmm. now. And it will only be really clear in hindsight that those are the mechanics that were playing out right before people's eyes while everyone was convinced that this was just monopoly money.
Well, I have a question, because I know that in past articles or podcast interviews, you have mentioned the stock to flow model before. And, when that didn't go the way people really expected, I mean, people crucified plan B. And I was wondering if you have any update in terms of just how you see stock to flow, since a lot of asset classes could be measured by that model. But right now with Bitcoin, I mean, what's happening?
Yeah, I'm glad you asked that, because I think that stock to flow has fallen out of favor. It has been much maligned here, but I think that the logic of it is still directionally correct. And so, stock to flow came out of, was inspired by what Saifedean wrote about in the Bitcoin Standard. This is a documented phenomenon with physical commodities, with precious metals in particular. Gold has a better stock to flow than nickel or copper, meaning that there's a lot less being produced every year, and that allows the value of gold to be higher because the market has to absorb less new supply pressure every year. So that's comes from that world, and it still holds, because the realities of supply and demand are such that, as Bitcoin produces less and less supply each new halving era, that, currently there's 900 Bitcoin being created every day. And at the current values, that's $20 million a day of new supply creation that has to be absorbed on average. Mm-hmm. So that's $600 million a month of net inflow of dollars coming into the market in order for the price of Bitcoin to go sideways. And that sets the ceiling, I think, that sets the price equilibrium, and that's stock to flow, ultimately, what we're talking about there. But Bitcoin has this incredible function of the new supply creation gets cut in half every 4 years. And that means the ceiling rises every 4 years. It's this stair-stepping function into the future, because rather than $600 million a month of supply pressure, in next year, it'll suddenly drop overnight to 300. And that, but there's still going to be $600 million of net new demand coming in. So there goes that causes your price discovery, your price to drift upwards to find a new equilibrium. That's stock to flow in action. I think what the S2F model got wrong, I think it was a little unwise from the beginning to have such prescriptive certain targets. I think the reality of something like this is there's giant error bars. You don't know if it's, in the first version of the stock to flow model predicted 55,000 per coin as the quote unquote equilibrium for this era. And then it got revised and adjusted based on some inputs to become $100,000. And so, anything in there, and really anything from 200 down to 30, I think is fair game. And from a conceptual point of view about, is the stock to flow model actually playing out in some capacity? And lo and behold, we've done that. I mean, we went to 70,000, and then down to 15. The price equilibrium for this, as we head into the next halving, could end up being 30K, could end up being 40K. And that is still significantly higher than the equilibrium we had in the previous era, which was 7 or 8K. So, the model was wrong in its confidence that it would go to 100K. It was wrong in its confidence even that it would go to 55K. But I think directionally it's true. It just might take more time than 4 years for, collectively every market participant to understand the new value of this asset. When you have this dislocation that happens every 4 years, it takes generations for people to fully incorporate the changed world. That might be the reason right there why the stock to flow model predicts something that ends up taking many more years for the market to play out.
And when you do the numbers, actually, as of the next halving, I think it will outpace gold in terms of less flow coming into the market officially. Right. But it just goes back again to what is your time horizon? Because I bet, 10, 20 years from now, when we look back at these stock to flow charts, we might have a very, very different perspective depending on what happens. And also who can predict things like a global pandemic that accelerates money printing to a level that we've never seen before. On top of that, all of that fiscal stimulus that had to go somewhere, and many people began to speculate, and there was this crypto bubble, and people were hoping to become overnight millionaires with a meme coin. And so I think a lot of that impacted it in the short run as well. But you mentioned it earlier. How many people actually understand Bitcoin fully? I mean, there are brilliant minds out there who still just don't get it. They might be really successful and knowledgeable in whatever industry they're in, and they just don't understand Bitcoin because they haven't taken the time. And it really does require you to peel back a lot of layers and also, question what you thought you knew. And it was surprising earlier when you mentioned some of the numbers of the people holding, because I was under the impression actually that I believe I've seen numbers where in America, it's like 40 million people own Bitcoin, and then maybe 125 million people globally. But you're saying more, you mentioned a significant amount or more than a certain amount?
Yes, I'm glad you highlighted that, because that's one of the things that I think is misinformed out there. Unfortunately, there have been some large personalities in the Bitcoin space who have held up this number of like 150 million globally have adopted Bitcoin. And really where that number is coming from is adding up all of the accounts that have ever had any Bitcoin in them.
Oh, okay.
Plus the estimates of how much activity there is on exchanges, and adding up everybody who's ever done anything on any exchange to get to 150 million people who have quote unquote adopted Bitcoin. But then you have to ask the question of what is adoption actually? if this thing is a store of value asset that should be a part of everyone's savings strategy, then understanding and then adopting Bitcoin necessitates people storing value, a significant portion of value in Bitcoin. So, everyone has friends, everyone who's a millennial, all of their friends have owned some crypto at some point. And yet, if you're a Bitcoiner, none of your friends understand Bitcoin and are, none of your normie friends have really fully bought in on Bitcoin enough to use it as part of their saving strategy. So those numbers that 150 million people have adopted Bitcoin, they're counting everyone who's ever had $5 in Bitcoin on Coinbase. And that is not adoption. And I think we do ourselves a disservice by pretending that it is, because it's actually way earlier than that. And so people should feel really excited that just how early
we're earlier than we thought.
Party.
Yeah.
You're earlier than you thought, because, if I sort of back of the envelope math of we're 0.5% into a meaningful adoption by the group of people that has any money to store.
That's
right?
so true. I mean, that's eye-opening. 0.5%. What will it be in fiat, terms when it's 1%, 5%? I mean, if you're in this space, you must realistically think it's going to eat into at least 5 to 10%, right, of the other asset classes. So it's a really good point. It makes you feel very bullish, makes you want to buy more.
Yeah. And I think that's the power of running these numbers. Like, you can get estimates and do your own analysis to really pressure test and size the opportunity here. And every way you look at it, it's earlier than you think it is. And this thing can, in theory, go higher than you conceived as possible. $10 million per Bitcoin is ludicrous. That's ridiculous. But because we are living through a very special moment in history, we are living through the digital revolution. And the first part of that was the internet revolution. That's where we digitized information. We went from a world where we had analog information. You'd go look up information at the library and you got it in your newspaper, to now all information is online. So we digitized information, but it was not possible to digitize value, because you could copy and paste value in the digital realm until Bitcoin. And Bitcoin is the singular instance of digital scarcity. And that is the internet part two. It is the digitization of value. And now we're going to live through, I believe, this complement to the internet revolution, which is the Bitcoin revolution, where we are going to see value go from analog stores of value, which are inherently inferior because you can't cap their supply. And then you have all the problems of physicality, like with gold, like with real estate, where you have to, do maintenance and deal with stuff. But you could store it in a perfect digital store of value. And increasingly people are going to wake up to that. And that's what we're living through right now. It's just so early that it's very easy to lose sight of how big the opportunity is. Only 0.05% of the world's value is in Bitcoin. I believe it has the ability to eat 25% of the world's value. That's a 500x in real terms. So that's inflation adjusted 500x potential. Granted, over the next several decades, it'll probably take a generation or two to fully reach that. But that's the fastest horse, and that's where I want to be.
For sure. Bitcoin is the singularity. I love that analogy as well. Okay, as we start to wrap up, I really do want to ask, though, because I believe that we need to be realistic and understanding and cognizant of the vulnerabilities that exist, so that we know how to best position ourselves in this community and this asset class for education. So what do you think are the hurdles to get to that 200 trillion that you're predicting? And why do you feel bullish that we'll still get there?
Yeah, great question. Huge question.
Yeah, I know.
And I guess I should state that, my analysis is of full potential for Bitcoin, and I have trouble seeing why it won't get there, but I could be wrong, right? My analysis could be wrong. So some of the things that I think are big risks are, it's funny that we come into Bitcoin thinking that this can't be true, and so we imagine that it can be easily broken. But the more you dig into the physics of it, the mechanics of it, it's rooted in math. So long as math remains true, the integrity of Bitcoin itself will remain true. I think it's all based on cryptography, which is mathematically proved. And the best analogy for that is when we make a fruit smoothie and you put on your ingredients into the smoothie and you blend it up, and out comes a smoothie, and it's a smoothie, but you could never recreate the ingredients that went into it. You could never piece apart the atoms and reconstitute them into the banana and the mango and the ice cream that went into it. That's what's going on at a mathematical level with Bitcoin. And that's why it's the security is perfect there. So it's not the math that I'm worried about. It's the social side of Bitcoin. And that includes the regulatory pressures that could be applied, the persecution that could occur. But then it also includes this other element, which I think is probably the biggest risk of propagating the message of Bitcoin, of making sure that the viral coefficient of Bitcoin remains positive, that people find out about Bitcoin. So, education is the key to that. So thank you for what you're doing by reaching you are with this podcast reaching people who might have heard about Bitcoin already, might not have heard about Bitcoin. So you are broadening the reach of Bitcoin education. And, that's what I try to do too. I try to write in simple terms and convey the opportunity with Bitcoin to people who might not have gotten it before, or maybe needed a simpler message in order for it to click.
And you do a great job.
Thank you. So I think that, there's the persecution element that could come from the government level, but even that, I think, is not a big risk in the big picture. By which I mean that, even if the U.S. wanted to go nuclear on Bitcoin holders, then it creates this incentive for every other country to welcome those Bitcoin holders and try to become the home of Bitcoin development. The US was the home of the internet development. That's why Google is here. And every other country on earth would love to be the home of the internet of value. And so I think that game theory plays out on an international level and makes it so that even if one country clamps down on Bitcoin, it makes it more likely that other countries will not clamp down on Bitcoin.
For sure.
And then the mechanics of the halving keep playing out independent of who's allowing Bitcoin in their country and who's not. So Bitcoin keeps getting more valuable independent of whether or not the US allows it to be here. So, that I think solves for itself over time. Ultimately, every country wants that capital to be welcomed where they, in their shores. Then the final category is the risk of, can we propagate the message to people in a way that it makes sense to them, that here's an asset that, because of its endogenous properties, its properties created within itself, will appreciate in value on a 4+ year time frame if you can withstand the brutal volatility along the way. And I think that's the responsibility of Bitcoiners to do. I think it also might not matter, because people are smart, and when they see an asset reliably go up in value every 4 years, that's all the marketing that asset really needs. But I think we can help make that more likely to be the outcome through Bitcoin education.
I am totally with you. I feel more bullish talking to you. All right. A question that I didn't get a chance to ask you before we wrap up here. Croesus.
Oh
There's
yeah.
got to be a story behind Croesus. And I was looking him up before we talked, and I understand that he was the king of Lydia and he introduced coins, and he was a very wealthy king. So why are you named Croesus?
Yeah. So that was an anecdote that was included in the Bitcoin standard, and it hit me like a ton of bricks. So Croesus was the king of Lydia, which is modern day Turkey, like 500 BC. So like 600 years after the fall of Troy, in the same region roughly. And what Croesus is credited with, it was a big milestone in monetary technology of the first standardized bimetallic coin. So you had your standardized gold coin. There was a certain weight of gold and a certain purity, and it had the stamp of the king on it. So you knew that this was the case. And that massively reduces the friction involved in trade. Because if you're going out into the market and you want to buy something, you have to, get out your bag of gold dust and get out your scales to weigh up the amount that the good costs. And then the merchant on the other side has to trust that there's no lead dust sprinkled in there. Mm-hmm. Or you have this standardized coin that exactly how much gold is in it because the stamp of the king says so. And it allows for, it reduces the friction involved in trade because it's easier to say yes. You don't have to assay and verify how much gold you're actually getting. And so that was a breakthrough in monetary technology, a major stepping stone in a long evolution of the progress of money. And Bitcoin is today's stepping stone, the next major step function change in evolution and progression in monetary technology. So I picked that name. Yeah, I picked that name as a nod to that.
Perfect. It's the perfect anecdote for a show called CoinStories. So, all right, where do you want to send people, and any just final thoughts you want to leave the audience with?
Oh yeah, you can find me on Twitter at Croesus, CROESUS_BTC. I have a Substack now where I'm trying to put out, simplified, enjoyable Bitcoin educational content. You can find that at jessemyers.substack.com. And yeah, in terms of final notes, I think I got all my rants out there, so people already got plenty to think about, I think. So, and if you want more, find my Twitter.
Well, your articles are fantastic. I really encourage people to check them out. I will link them. Again, if you're watching this on video, you get to see some of the charts. If you're listening on audio, make sure to check them out on the Substack. Thank you so much for joining me. I feel like I didn't know what you looked like before. And now I think you're like the Miles Teller of Bitcoin. So I don't know if you ever get that comparison, but
I sometimes get that one. Yeah.
Thanks so much.
Thank you, Natalie. Thank you for having me.
Thank you so much for checking out this show. Again, make sure you're subscribed so you don't miss out on any new content. And I love to hear your feedback. Leave a comment or send me an email at natalie@talkingbitcoin.com. Let me know what you think, if you have guest suggestions, and I'll see you next time.